going to talk about a pairs strategy. Now, we're going to talk about pairs trading in general and how you can do this with Prodigio. And the main idea is that I'm basically going to introduce you to the world of pairs trading, and I'm going to recommend that you check out what you can do with the ShadowTrader broadcast, and in particular the ShadowTrader's pairs corner, and how you can tie this into Prodigio in order to automate pairs trading. So this is a pretty cool way to use Prodigio. It's one of the only really accessible platforms that are out there that lets you trade the pairs as easily and in a robotic fashion. So I just want to get started with today's show by saying thank you for joining us. Prodigio, which is what this chat is about, is the automated trading system offered by TD Ameritrade and Thinkorswim. It is a fully automated trading platform, and what it allows you to do is to create robotic and automated strategies by composing them inside of Prodigio's Wizard Lab, and you can then deploy those strategies for robotic or semi-automated trading. Now, as I mentioned before, you should join in every Thursday at 4:15. I believe that's Eastern. I believe that's Eastern Standard Time. With Tom Cook for the Pairs Show. And the Pairs Show, they do probably 99% of the work for you. They spend a lot of time analyzing the market for pairs trading opportunities. They find the setups and they report them to you. You want to go over to ShadowTrader.net, and if you go up onto ShadowTrader.net, they basically have sign up for the newsletter to get the all of the relevant information, but they also broadcast a pair of the day via the My Trade. Right, so check it out. Yeah, Tom's great. He's able to kind of look at all of these setups and narrow everything down for you. These guys are pros at this. What I do is much more of a technical nature, so I'm going to be introducing you to how you do this, not really talking about the pairs setups. In order to get that information, join Tom every Thursday at 4:15 in the Thinkorswim chat. Okay, so I'm going to get started. The main idea, especially if you're using the pairs trading strategies from Tom, is that every day they'll give you a pairs setup, and they'll report on the progress of those pairs setups. Each setup is accompanied by a Prodigio Wizard Lab strategy, and you can take those strategies, you can save them to your computer, and you can import them into your Prodigio platform. I want to walk you through the process and show you how easy this is. On the website here, I am looking at the sample pairs trades, and you've got 3 sample pairs trades from the last 3 days, which is pretty cool. If I go to August 17th and I click on this link, they give you a pair of the day, JNG sample pairs strategies under the Wizard Lab section. And what these are their files that you can use to import and export to and from Prodigio's Wizard Lab. So the way that I save these is I right-click in my browser. I want to save link as, because I want to save this file to my computer. And I pick a spot on my computer where I want to save it to. I usually, on Windows here, save it in My Documents because it's pretty easy to save and to kind of manage, right from this My Documents folder. And I already saved this strategy, so you save it locally, and then when it's on your computer, you launch Prodigio, go into Step 2, the Strategy Builder. There are import and export buttons, and what I want you to do is press the import button, and you get another dialog, just like when I had saved that file, and this is how I can import that strategy into the system. They always prefix their strategies with strategy pairs, so these will kind of sort themselves next to each other alphabetically. Very nice for you. You can import these strategies. Now, with pairs trading, and I'm going to talk about the details of this in a minute, there are always two strategies. And the reason why there's two strategies is because in order to do a pairs trade, you go long on one stock and short on the other. In Prodigio Wizard Lab, that means you need two strategies, one which scans for the buy side and a second which scans for the sell side. When the logic identifies a trading opportunity, and if you have these strategies deployed in Prodigio RTS trading, that's the robotic trading, it will place trades for both sides of the pairs trade. It will then proceed to manage the pairs trade for you. But you can import these strategies by pressing open. Now I already imported these, so I'm going to hit cancel. But you'll then see those strategies in your strategies dialog. So here you'll notice from that example on the web page I have strategy pairs. This is XLNX minus LLTC. That's the buy side, and then there's a corresponding sell side. So let me talk about what pairs trading actually is. The idea behind a pairs trade is that you're taking two stocks which have a very strong relationship with one another. So going by this example, I can go into ChartTrader Pro and I can take a look at the first security in my pair, XLNX. And I want to put this out on a daily chart. And I want you to observe what's happening with these stocks. I'll actually press the new chart button and I'll open up a chart for the other pair, LLTC, the other stock in the pair, and pull up a daily chart on this. Now I'll make sure that I'm in my advanced layout. I want to select advanced layout. That's going to let me actually dock this down so I can have a split view, and I'll show you how these two things align. Now what happens in a pairs trade is that a pairs setup is found by finding two stocks that have a very high correlation. A correlation is nothing more than a mathematical measurement for the relationship in movement between the two stocks. If two stocks have a high correlation, then when one goes up, the other will go up. When the other goes down, the other will go down. And if I collapse some of these things, and I can dock this off to the side, I'll collapse this. And let me actually hide volume on these charts. Let me hide volume here. And so we're just going to we're going to focus on the price movement of these stocks. We want to align the x-axis so that they're both in relative proximity. And take a look at Xilinx versus Linear Technology here. You see how closely the curves of these stocks' price movement mirror one another. So, if I'm starting on, say, June the 17th, stock price will move up and then it's starting to move down. And down here, stock price moves up and it moves down. If you measure the correlation in the price movement between these two stocks will be highly correlated. And generally, when the shadow traders, such as Tom, are looking for pairs trading setups, they're looking for a pair of stocks that have a very high degree of correlation, something greater than 80%. Now, correlation, you could spend a whole set of lectures talking just about correlation, but all you really need to know is that it's a percentage where 100% means it's identically correlated, means they move identically. 0% means they have no relationship whatsoever, and correlation is interesting because it can be negative. A negative percentage of correlation would mean they act in opposite ways. An example of something that would have negative correlation, well, I kind of brought this up last week when I was actually talking about, say, SPY, which is the ETF for the S&P 500, and there's SPXU, which is the Ultra Shares Short ETF, where this security invests in shorting the S&P. What happens is you have an inverse relationship, and on the SPY, as the price moves down, on the SPXU the price moves up. And if you were to measure the correlation between these two stocks, it would be highly negative. And since they're so tied in as an ETF, this would be very, very negative. Now, the SPXU, it's not a mirror image. It does some things that are a little bit quirky at times, but it's going to be a very strong negative correlation. So let's get back to this LLTC minus Xilinx setup. And remember, this is a sample pair from the pairs show. You really want to tune in. You want to listen to Tom Cook and his analysis, and you want to follow the ShadowTrader pairs trading newsletter. They give you the up-to-date information that you can use in order to deploy right into Prodigio and take advantage of these trading opportunities. So the idea is to find a setup, and the whole idea behind pairs trading is that you look at a spread in these stocks. And what I can actually do is, I was actually looking at the spread over here. I was actually looking at another setup, but let's pull up. Let me collapse this back down to one chart here, and I want to pull up Xilinx minus LLTC just to look at the spread as the shadow traders look at it. Now, if I knock into toss XLNX minus LLTC, I get a chart of the price of the one security minus the price of the other, and this can be plotted in OHLC bar form. Now, the basic idea behind these pairs trades is that you are performing statistical arbitrage. Now, the word statistical arbitrage, it's a very loaded term, and a lot of people use it to do a lot of different things. You can use statistical arbitrage in order to set up these high-frequency trading systems, these kind of black box setups, but you can also use it in a more relaxed context where you are hedging risk based on probability and statistics. That's why pairs trading is so great, because you're really hedging your risk by reducing the impact of market direction. So what pairs trading actually does is it takes the market movement out of the equation, and what you're actually betting on is that the spread, or the difference in price A minus price B, will revert back to its mean. So in other words, you take two stocks, they have a high correlation, and you find a period of time where that correlation dips down a little bit. You find a period of time where one stock moves away from the other. What'll happen is that spread will begin to increase. As the distance between the stocks moves, this price will actually go higher. And when that price goes higher, what you're betting on is the probability that the price is actually going to come back to its mean. So it's very high probability play, looking for an advantage based on the arbitrage of things are out of whack and they're going to come back into sync with one another. And that's really all it is in layman's terms. So, and this might have been a trade that they set up a while ago. Exactly. Now here's, actually, we've got Tom in the chat, and he brings up a very good point. In this example, this was actually a short trade. And it's very important that I reiterate this for the video archive. This pair, as set up by the ShadowTrader team, was set up to be a short trade. And what that means is that XLNX minus LLTC is a trade where you're going to short XLNX and you're going to long LLTC. And that's very important. The direction of shorting the pair versus going long the pair is going to dictate the profitability of your pairs trading strategy. You can't just arbitrarily choose to buy one or sell the other. It has to be governed by the strategy, and that's exactly what the pairs strategists do. Is they find the opportunity, that's step one, and number two, they dictate the direction. Step three, they package all of this information together into a strategy which has all of the price thresholds based on targets and stops, and you can plug them right into Prodigio, and it's a simple 1, 2, 3-step process, which I'm about to demonstrate. And as soon as you've got that going, you're pairs trading, and you're taking advantage, you're leveraging the work that these guys are doing over here. So again, this is just a little bit of basic theory. If you want a true lesson on pairs trading, you want to tune in to Tom Cook Thursdays at 4:15 because they are the experts with respect to the strategy. Hopefully that gives you kind of a gentle introduction into what we're trying to do. It's a statistics-based play based on this concept that when two pairs go out of sync, you're betting on the chance that they're going to come back into sync. And you can see that this happens if you look at this chart. This is just a 10-period daily moving average. And you can see that these charts tend to be very flat. Usually, when there's a fundamental relationship between two pairs, that relationship exists because perhaps they're in the same market sector, perhaps economics dictates that the two have fundamental relationships, such as the relationships between energy prices and consumer staples prices. When you want to stock the grocery store, you have to have a transit system, and you have to invest money in the gasoline that ships the logistics, etc., etc. There are underlying fundamental relationships, and that comes out in the statistics, which is what they're taking advantage of. So it's really a form of statistical arbitrage. So let's get back into Prodigio, and I want to talk about how these rules and strategies are composed. Now, I want to reiterate, the best thing you can do is to go to the pairs trading setup to get these strategies and to import them into the system. But even so, I'm going to explain to you how these things are really, how it works. Because, well, two things. Number one, you can always take the strategies that they give you, and although I firmly recommend following their advice, you can always tweak it if you want to change things around a little bit, or if you want to change order parameters to go in, say, at limit versus market, etc., etc. But they have been tuning this system for quite a while now. And I think they first started offering it last year, but it's been worked upon much longer before that. So I strongly recommend you really tune into the show and take their advice, because you're going to be benefiting from a lot of research. So that said, here we are in Prodigio's Wizard Lab tab. Now, Wizard Lab is Prodigio's automated system. It allows you to build strategies based on technical analysis, and then you can compose the signals together in a strategy. Those strategies you can deploy to trade optics, and I'm going to plug one in here and hope to get some signals in the time that I'm talking. I'm going to put a couple on here just to see what happens. Let's see here. Some Bollinger Band strategies and some EMA crosses that I had done in the past and things like that. The idea is you create a strategy and you deploy it under a symbol list in either trade optics or RTS strategies. When you deploy it in trade optics, you see I'm already getting some signals based on this very rapid fire strategy. Those signals will come into your trade optics queue, and if you click the trade now, it'll show you the signal on the chart. So this is an upper Bollinger Band short strategy, and you could tell that this is looking for reversals. So it kind of whips back up, and the strategy is looking for it to go short. Right? So that's what that is doing right there. Trade optics gives you signals, but what's even more interesting and more really the better value is in the RTS strategies trading. This allows you to do the exact same thing. Let's see, upper BB with RSI short. And this deploys that strategy for automatic trading on the system. So under my portfolio, if I enable RTS trading, it's going to scan for those trading opportunities. And see, this is a very frequently trading strategy. It put on a trade on Microsoft and it got out of it that quickly. So based on my entry and exit criterion, do you see how fast that was? That's the whole philosophy behind Prodigio RTS trading. It can trade with high frequency, and it gives you all the tools to be able to do that so that you don't have to be a quant. And that's probably the most exciting part about this. You can make your own strategies, you can be the quant, or you can work with others and they can suggest to you the strategy, just like we're doing with the pairs trading, and you can use all of that research to your advantage. So now that you, if anybody is following this for the first time, if you, now that you have a brief, introduction on what we're trying to do here, I'm going to walk through the steps of this pairs trading strategy and hopefully give you some insight as to the amount of work that these guys do day to day in order to provide this service. Wizard Lab is set up as a series of steps, and the first step is building a rule. What the rule builder does in Prodigio Wizard Lab is it allows you to define the technical analysis and logical composition of signals that you compose inside of a strategy. What does that mean? Well, it lets you do the same things that you would do on a chart, such as put moving averages on and looking for moving average crosses, or analyzing RSI, finding different conditions. In Wizard Lab, I could create a rule that when price crosses this moving average, it fires a signal. And that signal is then sent into a strategy, and that says if I should buy the stock, sell the stock, if I should add more into the position and scale in, if I should get out of a position, etc. Step one is finding those signals. And so here, let me open up this XLNX minus LLTC entry. This is the rule for this sample spread where, let me kind of give you the bird's eye view here. I can collapse these to kind of give you a broader view. This is the rule that looks for the setup. And let me give you a little bit of insight into what this is doing. First, let me read it to you, actually. It uses some source data. Source data is something inside Wizard Lab which defines where the data is coming from. Now, usually you work with OHLCs or candlesticks the same way that you would look at on a chart. So those are represented by studies in Rule Builder, and this is all a drag and drop user interface, and the idea is very simple. You take outputs and you send them into inputs of other studies. This creates a logical flow, which I like to do this left to right, but there's no restriction. You can go left to right, right to left, north to south, south to north, it doesn't matter. And the idea is you end with a signal. And just as I was talking about creating signals before, that's how every rule ends. It ends in building a signal. This is defining how the server should crunch the numbers and when it should generate the signals based on the technical analysis and logical operators. So here we represent the pairs trades by looking at something called a single OHLC. And what a single OHLC is it is looking at a very specific stock. And that's why you have the symbol parameter here. And in order to represent the spread of Xilinx minus LLTC, is you quite simply use the subtraction operator. And so if I take a single OHLC with XLNX, and if I subtract LLTC from it, that's going to give me the difference in the price values. Now these are OHLCs, so the price value that it looks at primarily is the close value. You can always change this. We have these adapter studies, and an adapter study lets you interpret the data in a different way. For example, there are adapters to access the open, the high, or the low prices, and there's also adapters to access the volume. Well, what this will do is it will take, based on 1 minute bars, it'll take the closing prices of those bars and find the spread in between them. Now the setup for the pairs trade is it's going to look for the difference in price to be greater than or equal to 374. And let me show you what that looks like. If I look at the today's bar on XLNX minus LLTC, I'm looking at the daily spread. Right, and the daily spread right now is at 299. Now one thing that you should be aware of is that when you look at the spread between 1-minute bars, that might differ slightly than what you see on these bars. You'll notice the high value on this today was 383. These bars, as you see it when you type them into TOS, it shows you the difference between the two highs on the day. And the interesting thing about pairs trading is that those highs might not have been near one another. So you really want to use this daily based spread as a measuring stick. In order to find out the real spreads, you should really drop down into the 1-minute spreads, which gives you a much more accurate depiction of the trading activity on the day. So if I start, let's see, here's a little bit of pre-market. So what I did was I highlighted all the price movement on the day. The high price, the intraday high price, was 334. Now here's the idea. These prices are going to oscillate. And by the end of the day, this setup might still trigger. It could very easily trigger depending on the price movement of the securities. We're scanning for a difference of $3.70, I think it was 76. No, 74. And these numbers are very important because these are the thresholds which are analyzed and identified by Tom, and the ShadowTrader team, and they say this is the opportunity point. If the spread diverges so that it's higher than 374, you have a trading opportunity because the difference from the mean has increased. Right? Now, what was the mean price? Right? The mean price was about, let's see, and you always have to go by the prior close unless you have forming bar on. So the mean price was 279. Is the prior day mean, 10-day mean. So in other words, if price bumps up by almost $1 minus 5 cents, so that's about a 95 cent, you have a very integral opportunity in order to trade this spread and have a very reasonable chance at making a nice profit. Now they look at a lot of things when they come up with these thresholds, but that's the idea. We're waiting for price to diverge from the mean by a certain amount. Right? And this part of the strategy, of the rule, really just defines your entry point. And something that I should explain down here is their sophisticated use of time adapters. Right? So if I look at this rule from a bird's eye perspective, it's really very simple. I'm looking for price breaching that level of 374, and I have an and here, right? And this and has this whole lower branch, and it looks complicated, but it's really not, and I'm going to explain what that is. If these two conditions line up, that's where it's going to fire my signal. Now, let me explain this lower condition because it's very interesting, but it's simple. This lower branch, it also starts by looking at single OHLC for Xilinx and single OHLC for LLTC. It's using something called a time adapter. Time adapter is important if you care about the time of a single stock. So in other words, when I'm looking at single OHLC of XL and X, these OHLCs, they might be trading a little bit differently than one another, and this is a very subtle explanation. Let's say I'm looking at 5-second OHLCs. If you have a stock that does not have very high volume, right? Something that has high volume are the ETFs. The ETFs are very high volume. They're traded by a lot of people. As a result, there's a lot of trading. Some stocks do not trade as often. And when stocks don't trade as often, there's a chance that an OHLC bar might be missing during the day. And the reason why it's missing is because nobody traded in that minute, or if you drop this down to 5-second bars, because no one traded in that 5-second interval. And this can happen. In particular, what can happen at the market open, especially if you use 5-second OHLCs, is that one stock can trade within the first 5 seconds and the other stock might not trade in the first 5 seconds. When that happens, you really want to create a governor that makes sure you're not subjecting the strategy to gaps. And that's what this is. This is handling the possibility of a gap at the open of the market. And it's advanced even beyond that, and let me explain why. If I read this left to right, it says, tell me the time of the 1 minute bar on Xilinx. Now you're a lot safer if you're on 1 minute. And for the pairs trading strategy, 1 minute resolution is a pretty good resolution to be going off of. It's saying make sure that the time of the bar that you're looking at on Xilinx is after today at 9:35 and 30 seconds. Now this threshold, 9:35 and 30 seconds, was introduced in order to skip past any kind of volatile behavior that occurs during the market open. Remember the description of what pairs trading is. It's a statistical arbitrage strategy that tries to hedge risk by ruling out market direction, and what you are taking advantage of is the idea that two stocks that generally have high correlation will come back to the mean of their spread. So you're not betting that the stocks are going to go up or the stocks are going to go down. You are betting that two stocks that have fundamental relationships are in a period of anomalous behavior, and you're betting that that's an anomaly and that things will go back to normal. That's why pairs trading is so exciting, because this happens more often than not, especially if you're just speculating on stock prices. This is something which is based on mathematics, and it's based on intrinsic behaviors. So you have technical analysis, you have fundamental analysis built right into the strategy, and it really makes for an excellent package. This first half makes sure that the OHLC bar on XLNX is after 9:35:30, and it makes sure that the same thing happens for LLTC. In other words, it makes sure both bars are trading today and that you're skipping past volatile behavior at the market open. And that could, volatile behavior on the market open could actually cause things that are adverse for pairs trading anyway. And so what Tom has been able to do here is he's been able to find kind of the the stew which makes it all work together, right? And so they're having quite a bit of success with these strategies. But that is how the entry is set up. You have the actual spread, and this is tweakable, but again, I highly recommend you go off of the values suggested by ShadowTrader. But this is the entry side to the strategy. What this will do is it'll fire signals, right? And I'll focus on the entry side, and then I'm going to talk about the exit side. But the way this works is you take this rule, and here's the rule, right? When you go to step 2, which is what I clicked over on this tab right here, I clicked over to step 2, which is the strategy builder. Strategy builder allows you to take the rules that you had saved in step 1 and join them together in a strategy. For these pairs trades, they're going to use the same rule because it's going to be bound to the same logic. They're even going to use the same exit rules. But you're going to have two different strategies. And the reason why you're going to have two different strategies is because the scanning rule defines whether the strategy goes long or goes short. Right? And you may be asking yourself, well, why couldn't I just make one strategy that buys and sells? And there's actually a very reasonable explanation. In Strategy Builder and in the Rule Builder, the strategy can't assume opposites. I always go back to a classic example of using an RSI. And let me explain this because this is important actually. If I take a study of RSI, one common way to interpret RSI, which is the relative strength index, is that it looks at movement in price, specifically ratios of up moves to down moves. And when the RSI crosses above 70, it considers it to be in an overbought condition. In other words, there were too many up moves versus down moves in order to create a fair market. So in other words, it shot up too quickly. Here's a fantastic example where the RSI really kind of is right on. It's dead on. This does not always happen, mind you. This does not always happen. But notice, I'm just looking at Microsoft on a 5-minute here. Yesterday, you see what happened with the RSI? Price was gradually moving up, and it spikes. It spikes, and all of a sudden, too many people purchased into this stock. and it created some selling opportunities. And that's actually reflected in the RSI because the value was above 70 and price did agree with the RSI and it came back down. So this would have been a peak in the relative price movement of Microsoft. The same thing happens over here. This bar is considered too extended in the up move, especially when you add in the recent activity. And again, it says it's an overbought condition. One strategy is to sell when the RSI is above 70 and to buy when the RSI is below 30. Now again, this you don't want that to be your only component of your strategy. You can always include this as a confirming indicator, but again, don't create a strategy that only uses RSI. The reason why I'm explaining this is because I wanted to explain opposites. In terms of the math and in terms of logic, price crossing above 70 is not the opposite of price crossing below 30. And the reason is because Wizard Labs Rule Builder, it gives you the power of a scripting language, and you can really do any kind of technical analysis that you want. The opposite of crossing above 70 is crossing below 70. The opposite of crossing below 30 is crossing above 30. And so in order to represent a strategy that does one thing when it crosses below 70 and another thing when it crosses above 30, you need two different strategies. That's why pairs trading has two different strategies. And when you import these strategies, you'll notice there's a buy strategy and a sell strategy. Now the way that you deploy this, and you can backtest these strategies as well, let's go to step 4. Let's go into deploy to RTS strategies. You'll notice that these strategies are here. The long strategies are all categorized on the left side. So here's my strategy pairs XLNX minus LLTC buy. And my short strategies are all on the right side. What that means is when this, if I deploy this strategy right here, when this triggers, it's going to buy the stocks defined in my symbol set. And this is very important. For pairs trading, you want to create one symbol lists. Let's do that now for XLNX minus LLTC. Oh, and by the way, RTS stands for Robotic Trading System. You can access this either from the quotes panel or from the Wizard Lab backtest. But the easiest thing to do is to go to the quotes panel. If I click this editor button right here, I get the symbol list editor. And because I want to trade the pair of Xilinx and LLTC, I'm going to want to create two new symbol lists. So you bring up the symbol list editor and you hit new, and I'm going to give this a name. I'm going to let this be my XLNX list, and I'm going to type in XLNX and hit enter. And if I save this, this will save a list for XLNX. I'm going to do the same thing. I'm going to create a new list. I'm going to call it LLTC, and I'm going to give it LLTC. Oh, LLTC. I'm going to save. And now I've got two different lists, and those will show up in the drop down here. Here I've got XLNX, and here I've got LLTC. And if you're thinking 2 steps ahead of me, you can start to see what you can do with this. I can add a basket of symbols into this list, and when the strategy finds the trading opportunity, it will trade the basket. Now for pairs trading, you want one symbol. So you have 2 different baskets with one symbol in it. But from the technical standpoint of what this system is capable of doing, you can create rules that perform basket trades. Now over in RTS strategies, we mentioned before, this pairs trade is a short pairs trade. When it's a short pairs trade, what that means is you want to short XLNX and buy LLTC. You always read this left to right. If it's a short pairs trade, you short XLNX and buy LLTC. So what that means is over here on my long side, these are my long strategies. Since I want to go long on LLTC, I'm going to click the drop down, And now that I have LLTC in my symbol list, I can check this off, and now the long side is deployed and it's running. I want to do the same on the short side, and I want to short XLNX. Click the checkbox, and now it's deployed. This strategy is now deployed to the server, and it's scanning for the pair. And what it'll do is it will go short on XLNX, and it will go long on LLTC at the same time. That is the entry side of the pairs trade, and when it's in the position, it's going to be subject to the management rules of the pair. And I'm going to cover this very briefly. So let's take a look at the strategy builder here. Notice in my strategy pairs XLNX LLTC buy, if I go down to the management close position, I have two different rules that manage the closing side of the pair. There's a target and a stop. These are in both strategies, the buy side and the sell side, and they're the same. And we're going to take a quick peek at them just to talk about the technical aspects of them. First, we've got a stop. And the stop is very simple. Now the stop looks like something that is the opposite of the entry. First of all, notice this bottom part of it, it's identical to the entry side. That's just the time checking that was introduced. And on the right, it's just these two conditions sent into a signal. But before, where we were looking for the price to rise above 3.74, this is a stop, because if price keeps going, if the divergence between XLNX and LLTC continues to increase, remember we're betting that it's going to come back to the mean, but if it continues going off in that direction, that means the stocks are moving further and further apart from one another, and chances are becoming less likely that a mean reversion will occur. That's why the stop is set at 4.5, because if I were to look on the chart in TOS of this, notice where, now this is my daily chart again. Let me bring this back down into the intraday. Take a look at where 4.5 would be. 4.5 would be way off the chart. It'd be all the way up here. Now, again, we're looking for that divergence to be up here, but this is a stop, because if the price would continue to trend in this direction, this is a reasonable threshold for which to say, quit the pairs idea because there's something different going on and you want to exit instead of risking it continuing to diverge. That's the idea behind the stop. It's quite simply stopping out if the reversion to the mean does not occur. And that's all this is. Very simple, but very sophisticated. And that's another thing I hope that everyone can really appreciate, is that this is a sophisticated statistical strategy, but the implementation is so simple in Prodigio. And the reason why it's so simple is because you have Tom and the ShadowTrader guys working day to day performing the hard part. And you can really take advantage of that. Again, the hard part is finding the setups, finding the correlation, finding the thresholds. These are all packaged and given to you in Wizard Lab strategies. So let's take a look at the target side. And this is interesting. The bottom, again, this is identical to what we saw before. This branch is just the time branch. And if I scroll to the right, again, it's AND sent into a signal. Well, let's take a look at what the target is. Again, I mentioned this is a statistical arbitrage strategy. We're looking for mean reversion, and so we're taking the spread on the 1 minute, the difference between XLNX minus LLTC, and we're finding mean reversion. Mean reversion is when it's less than or equal to the 10-period moving average. Now, mean means average. Moving average is the mean, so they're the same thing. So in Wizard Lab, if you use a simple moving average of the spread, and we're looking at the dailies here because the daily spreads are really what define the underlying relationships between the pair. So we're looking at a 10-day moving average. And what you get is, back on TOS charts, if I drop down into daily bars, our mean, and again I'm reading this off of the prior day. I have to look up into the cyan color at the top here. It's 2.79. That would be mean reversion, and that's our target. So we would be going short the pair on XLNX. We would be going short, and we would be buying LLTC, and we would be capturing the profit based on it's far away from its mean and it's reverting back to normal. And this is a good setup. This is a great setup because you see, especially in the past, say, couple weeks, how the spread movement tends to consolidate. And this is where these setups are coming from. They find where the relationship is fairly stable. Now, I bet you if I go back in time, see, if I go back in time far enough, I find times where it's not stable. You see how the spread behaves a little bit erratically, especially right here. The spread really changes and it really has some action on it. This is going to be, they're really going to find setups where it's consolidating, because that's where the arbitrage comes in. That's really where you get advantage of the probability when the spread itself often reverts back to the mean. And so that's what the target is looking for. It's really looking for when the price moves back to the 10-period moving average. And that's really all there is to it. So technically, in Prodigio and in Wizard Lab, that's all of the nuts and bolts to how you do pairs trading in the system. Now, there's a lot of work ahead of that, and that's what really, the ShadowTrader does for you. They find these setups and they crunch the numbers with the correlations, they perform the scans, and they analyze using technical analysis, and experience and everything else they bring to the table, and they find the setups for you. And I strongly recommend you check them out. That's shadowtrader.net, and make sure you join Tom Cook every Thursday at 4:15 for the Pairs Show. It's really great. Those guys do a fantastic job, and we've found a way that we can use these, take that advice, incorporate it into the system, and hopefully we're presenting something that you can recognize. There's a lot of profitability potential in using these setups. So with that said, that's really pairs trading in a nutshell. You're gonna get the most out of pairs trading if you listen to Tom. He's really going to explain to you the who, the what, the where, the why, and the how of everything. But I hope that what you've been able to take away from this is technically what the system is doing, and maybe learn some tricks for things that you can do. I'd mentioned the basket trading. You could possibly set up strategies to do basket trading. It's another way to use the system. So that's it for this week's Prodigio chat. I'm going to join you next week, next Wednesday, for our next session. And remember, we always have these Prodigio chats every Wednesday, 12 o'clock Eastern, 11 o'clock Central. And we always try to combine not only some basics, but we also try to talk a little bit about strategy as well. So send in your questions to prodigio@thinkorswim.com and request activation by sending an email into support@thinkorswim.com. Subject line, Prodigio activation. Join us on the web, prodigiorts.net, and follow us on Twitter, twitter.com/wizardlab. As always, my name is Brian Wagner. I'm the Chief Architect of Prodigio RTS, and I want to thank everybody for joining me today. This video, as always, will be archived on the website in the video archives. That said, great trading, everybody. Have a great week, and I'll see you soon. Take care.